Good morning, friend. Today topic naked call. That means uncovered call or short call in cryptocurrency options trading in USA. And which five companies this week strong fundamentals plus government support plus acquisitions. How do they grow profit? Mention the script. Naked call, that means short call in crypto options, means you sell a call option on a crypto asset you do not own, taking limited premium income but facing theoretically unlimited loss if price rises sharply. 1. Naked call in crypto options USA context. A naked call uncovered. Short call is when you write a call without holding on the underlying collecting premium but with unlimited upside risk if the asset soars above the strike. In crypto, this could be a call on listed crypto ETF or a crypto commodity trust options. For example, on a multi-crypto commodity based trust now permitted for options listed on some US exchanges. US regulators are moving towards clearer rules with proposals to classify crypto as securities, commodities, and expand CFTC oversight, which would formalize where and how such options can trade, risk reward profile, maximum profit, the premium you receive when selling the call, best case option expires worthless if underlining states at or below strike price, maximum loss theoretically unlimited because the underlining BTC, ETS or a crypto trust unit can rise without limit while you are obligated to sell at the strike price. Margin. Brokers, exchanges typically require high margin stress test and may liquidate if crypto moves volatility violently. When some traders use naked calls, advanced only strong bearish or neutral view on the crypto assets over the options life. Expectation that implied volatility is too high and will fall, making short options cheaper to buy back. Professional or edged environments, e.g. fund short calls while long correlated assets or delta hedging with futures. Why it is dangerous in crypto? Crypto is highly volatile with gaps, news, driver moves and 24 by 7 trading, so naked calls can blow up accounts in a single spike. Liquidity in many crypto options markets is still thinner than in equities, so exiting a losing short call can be expensive or difficult. Illustration example, you sell a 1 month BTC call with 80,000 strike price on a trust ETF for a premium of 500. If BTC rips to a level where the ETF implies 100,000, you may need to buy high in the market and deliver at 80,000, losing 20,000 minus in the 500 premium. 2. 5 US companies fundamentals, government support, acquisitions, profit growth this week. Your request is very specific. This week, 5 companies in USA with strong fundamentals plus government support plus acquisitions and how they grow. Profit public looks, give outlooks and macro trends. but they do not list a clean top 5 matching all three filters for this exact week, and they change day to day. However, based on current US deal and industrial policy trends, AI chips, energy transitions, infrastructures. Typically, examples of companies that often sit at the intersection of strong fundamentals, policy support, and active M&A include sector focus. Example type of company illustrative, not exact. How to long US ship designs foundries benefits from US industrial ship style incentive and selective acquires niche IP or packaging firms. Cloud and AI software, hyperscale cloud or AI companies acquiring startup to accelerate AI capabilities and enterprise. Sector focus, example type of company, illustrative, not exhaustive. Source futures, utilities, energy tech players particularly participating in grid upgrade and renewal, sometimes acquiring storage or grand software firms, often tapping federal state incentive programs. This is energy transitions and grids. Life science and portable pharma, biotech, medtech. Sector focus, example type of company, illustrative, not exhaustive. Med tech firms acquiring pipeline assets or medical device technologies while benefiting from targeting innovation support in some programmed. Advanced manufacturing industrial companies receiving support for onshoring strategy, production and acquiring automation, robotics firms, critical infrastructure and manufacturing. Up to date top 5 of this week list. I cannot honestly name 5 specific picker with proof that they all met your 3 filter exactly for this week. The realistic way to build such a list has screen for strong fundamentals, ROE, cash flow, reasonable debit. Cross-check news filling for recent government incentive contracted support. Look at recent M&A announcement or 8,000 press releases. If you want, tell me your prepared sectors, AI, crypto, energy, etc. And I can propose 5 concrete US listed names with current high level rational using latest news follow-ups. Build an interactive naked call pay up calculator with adjustable stock price, spike, premium and expiration, showing P profit and loss graph and break even. Naked call pay up diagram and break even point. When to use naked call strategy, naked call versus covered call differences. Risk management for naked calls. When to use naked call strategy, use a naked call only in very specific advanced situation when the 3 things line up: market view, a volatility and your risk capacity. 1. Market view, price direction. Use a naked call when you have a strong bearish or at least not bullish view on the underlying for the life of the option. You think it will stay below the strike or fall. You are comfortable that a big upside rally is unlikely in that period. For example, no major event where price can suddenly spike. Avoid it if you think there is any chance of a sharp upside move. Second, volatility and time decay. It is more suitable when implied volatility is high and you believe it will fall, making options cheaper later. Good for the seller. There is limited time to a catalyst and you expected the underlying to remain range bound, so theta time decay can eat away the opinion price, not options price, while you keep the premium. In simple terms, best when the options is expensive and you expected it to expire out of the money. Third, your capital experience and risk limited. You should consider a naked call only if you are an experienced derivatives trader who fully understands unlimited risk and assignment mechanics. You have sufficient margin and can withstand very large adverse moves without forced liquidation. You have a, you have a strict risk plan, maximum loss per trade, stop loss levels, energy hedging using future or long calls for most retail traders, brokers, and educators recommended using covered calls or defined risk call spreads instead of pure naked calls because those cap the maximum loss. If you tell me whether you are trading stocks under options or crypto options, I can translate these points into 2 to 3 concrete examples set up for you. Follow up how unlimited risk plays out in naked call blow-ups and proven position management tactics, deep research. What are the main risks of naked call strategy? How to manage a naked call position if stock rises? Naked call versus covered call differences. Example PF diagram for naked call. How to manage the naked call position if stock rises. When a naked call goes against you, stock rising, you manage it by deciding early whether to cut losses or roll based on a predefined risk plan. 1. Basic energy rules. Set a maximum loss, for example 2 to 3 times the premium received, and close the short call once that limit is hit. Do not wait hoping it comes back. Watch key levels, break even strike plus premium, and recent resistance. If price breaks and holds above the ready to act quickly. 2. Simple adjustment size. Close the position, cut loss. Buy back the call at a loss and exit completely. Best when move is strong and you no longer believe stock will come back down, convert to a covered call. Buy the underlying shares so your short call becomes a covered. Unlimited risk is removed. Now your maximum loss is limited. You may miss upside but no blow up from the call alone. Convert to a trade spread. Add a edge by a higher strike call in a same expiry, turning it into a bear call spread. This caps your maximum loss. You sacrifice some premium but remove the infinity risk. Roll the call. Buy back the loss in call and sell another call further out of the money or further in time, often for additional credit. Use it when you still have a bearish neutral view but want more room or time. Risk is still present, just reshaped. Third, step-by-step checklist. When stock is rising, measure check and pre and profit and loss, current delta, how sensitive position is to further moves, and margin uses. Decide objective, cut loss now, cap risk, spread or covered call or buy time, roll. Pick lowest risk, repair, generally closing or converting to a spread. Covered call is safer than chasing the stock naked. Execute quickly. Use limit or combo orders for spread rolls to control slippage. For small accounts or beginners, the safest practice is usually define a strict loss level in advance and simply close the naked call if the stock breaks that level instead of trying complex adjustment. If ST4 105 ST level 150 ST 4 to 105 options expiry worthless maximum OST minus 105 equals 0 maximum 0 ST minus 105 equal OMX OST minus 105 equal 0 profit or loss equal plus 3 per share. You keep full premium micro plus micro option plus 1 break even price. Set profit and loss equal 0 3 ST 105 equal 3 ST minus 105 equal 03 minus ST minus 105 equal 0 ST equal 108 ST equal 108 ST equal 118 80 108 at 108 you neither profit nor loss excluded fees. If ST 100 1000 108 yes 100 ST 108 profit and loss becomes negative and falls linearly as price rises. Example, at 120 profit and loss equal 3 minus 120 minus 105 is equal 3 minus 15 equal 123. 123 minus 120 minus 105 equal 3 minus 15 equal minus 123 minus 120 minus 105 equal 3 minus 15 equal minus 12 per share. Only prepare plus 1. Please understand, if you not understood, you will clearly once again listen or pursue the matter script, then you can understand. Graphically you would see a horizontally line at plus 3 for all stock prices up to 105. From 105 upward, the line slopes down, crossing 0 at 108 when going down without bound as the stock price increases. Option Education Investopedia. This is the diagram. You will find out what is what. Naked call, OAC, short call, calls a summary diagram, buy calls long, sell short, covered calls, naked call options. You will find out what is what. You will pursue also. Thus, you will clearly analyze them. This is short put profit and loss graph. You will, once I request, you will pursue this graphic profit and loss or other. You will pursue and conclusion. Please like, share, subscribe and comment. Another 130 minutes video is there, that is heart touchable video. You will find out what is what.
Naked calls are a type of option strategy where an investor sells a call option without owning the underlying cryptocurrency. This approach can be highly risky, as the seller is exposed to potentially unlimited losses if the price of the cryptocurrency rises significantly above the strike price. In the United States, trading naked calls in cryptocurrency options is subject to strict regulatory requirements. Investors typically need a margin account, must demonstrate a high-risk tolerance, and provide detailed financial disclosures to their broker. Additionally, naked call strategies are not permitted in retirement accounts due to the potential for unlimited losses. Coinbase stands out as the largest US-based cryptocurrency exchange, recently expanding its reach by acquiring Deribit, a major derivatives platform. Ripple Labs has strengthened its international presence through the acquisition of Metaco and secured regulatory approval in Singapore, enhancing its global operations. Anchorage Digital, recognized as the first federally chartered cryptocurrency bank in the United States, received a significant investment from Tether, boosting its valuation and market influence. Crypto.com has deepened its engagement with U.S. regulators by opening a Washington, D.C. office and forming strategic partnerships across various industries. Digital Currency Group has demonstrated regional growth and government support by relocating its headquarters to Connecticut and creating hundreds of new jobs, further solidifying its position in the digital asset sector.
Another is my Amazon affiliated website. Please cooperate to and pursue this hand-picked excellence just for you. Discover our exclusive collection at www.noblestores.shop. We have partnered with Amazon to bring you top tier products with the convenience and speed you trust. When you shop through our curated links, you support our work through a small commission from Amazon at no extra cost to you. It is a simple way to shop smart while supporting our community. Quality meets convenience. Click below to explore your next favorite find. Shop our Amazon favorite now. This is another one. Creators, only creators. Google has subscribe plus grow your channel. You will find out what is what. This is not affiliated link. Friendly and supportly I advertise. Please like, share, subscribe and comment. This is mine. Please comment what you want, what you ask. Any comment I will reply. Please certainly comment. Friends, make sure your video description has disclaimer. This video is for educational purpose only and is not affiliated with Google hash. Thank you, my dear friends. We will meet next video. Once again, thank you.